You have these two key levels of resistance this morning. If the markets can break above that, we'll likely get a little bit of follow through here over the next few days, kind of heading into the inauguration. All right, let's talk a little bit about what you need to know before the bell this morning. Yesterday, we had talked about, in particular, that with the PPI and the CPI report coming out, that was really what the market was hinging on. We had spent Monday and Tuesday literally clinging by our fingernails to that 100-day moving average, and we had broken below it, got back above it at the close, broke below it the next morning, climbed back above it by the end of the afternoon. The markets were anticipating the report that we got. We'd had a bunch of sell-off in the markets, of course, reversing some of that previous overbought extended condition, had worked off a lot of the markets into a more deeply oversold condition. Sentiment had gotten fairly neutral, not negative, but kind of neutral, but really from being overly bullish to neutral. So we had a very good setup, and the market was starting to kind of sense over the last really 2 days heading into those reports that they would likely be basically benign, which they were. And so, of course, that report yesterday led to a as we said an inline or better report. Look for a fairly sharp jump in the markets. Exactly what occurred. We got above the 20-day moving average. This morning, we are wrestling with two key areas for the markets right now. First of all, the market is right up here against the 50-day moving average. So that's going to be a key break. If we can get above the 50-day and hold that through the day, that's going to potentially set the markets up to rally a little bit more into Friday, potentially reverse this. We're very close to triggering back onto a MACD buy signal. That should give the market some additional lift up towards 6,000. We'll kind of see how this plays out over the next few days. But the other side of this also is that we have a very defined trend line along these tops here that the market's going to wrestle with, and it intersects right with the 50-day moving average. So you have these two key levels of resistance this morning. If the markets can break above that, we'll likely get a little bit of follow through here over the next few days, kind of heading into the inauguration. Now, understand that Monday is a holiday. It is Martin Luther King Day on Monday. So markets are going to be closed. So again, we'll have a holiday shortened trading week next week as well. We also have the inauguration next week. So very likely we're going to see a bit of a push higher here, just considering the fact that we're not overbought. Sentiment is fairly negative, so that gives us a good bit of fuel, so to speak, with this kind of overbought buy signal about to turn up. More importantly, we're starting to see money flows turn positive. Yesterday, we had fairly negative money flows during this entire decline, which exacerbated the decline a bit, of course. But over the last 3 days, we've seen those turn, and yesterday money flows actually went positive. So we did see some fairly decent buying power coming into the market, and there's likely a good bit more of that sitting there right now, looking to at least for a tradable rally here, if nothing else, push asset prices higher. Again, as we've talked about before, we're certainly not out of the woods. Lots of expectations for an increase in volatility this year. We're not out of the woods yet, of course, on the concerns about inflation returns, what the Fed's going to do. So again, on this rally, use this rally to rebalance risk a bit. Trim exposure if you need to. Things that haven't been performing, let those go. Buy stuff that's performing better. Just your normal processes of managing money. But use this rally to do it. Don't expect this rally to just take off and run off to a new bull market high. It could, but there's a lot of reasons this year that we're being a little bit more tactically bearish, as we talked about on Tuesday. And if you haven't read that article yet, we certainly encourage you to do it. There's some reasons to be a little bit more concerned about what the outlook's going to look like this year for the markets. Just very quickly, of course, the big news yesterday was this very, very sharp drop in bond yields that occurred. Again, that, we've talked about a couple things, and things I'm going to address with Mike this morning. As we said yesterday, term premium is complete hogwash. It's just a plug number for what I can't explain. But we had market yields running up in anticipation of this inflation report, a very, very sharp drop in yields as core inflation actually declined yesterday. And that really kind of brought up the potential for rate cuts to about 38 basis points this year. So already markets are starting to price in more Fed rate cuts. That was bullish for bonds yesterday, very close to triggering a buy signal on bonds from these levels. But that's what you need to know before the bell this morning.